What's up, guys? Honestly, it's crazy how many times I've been asked if investors will fund my idea. So I'm making this video and this podcast to save a lot of people a lot of futile energy. Now look, guys, I get it. Starting a company, that's really hard. It costs money and you probably don't even have the resources, but that's just life. Now, you're full of beans and enthusiasm. You want to make magic happen, but you need the help to do it. So you just need someone to fund you to get your idea off the ground. Unfortunately, life is about lemons. You just need to figure out how to make lemonade. You might not even have the money for a literal lemonade stand though, right? Look, on this, I could smack you down quickly, but I like to help you think for yourself. If you want to learn more, stick with me right now.
Ask Alex. Ask Alex. Because you don't know what you don't know. And if you don't know, now you know. Yeah.
Okay, guys. The first most important thing I want to teach you is to pretend that you are an investor already. So, if you're an early stage investor, what would you want to invest in? What would the characteristics be? Now stop and actually think about this. Maybe even pause it. Okay, I'll shut up now. Okay, no, seriously, if you're really looking for an answer to this question, pause and answer it in your head. But I'm sure you know how to do that, okay? Something that was proven and a sure thing, or hopes, dreams, and rainbows. Obviously, the sure thing, right? Every step of validation creates more certainty that your hard-earned cash you are investing is not going up in smoke, right? The best case is a startup that is profitable. Well, depending on your growth rate, right? Then revenue generating, then lots of users, mad press coverage, a super product, then somewhere down here, an idea, right? Every step below the ideal creates uncertainty and your valuation drops millions. Thinking like an investor yourself helps create a lot of clarity to questions like this. You don't know, that's fine, but when you think like an investor, it becomes more obvious. Why would you want to invest in an idea as an investor when there are literally hundreds of thousands of startups around? You just wouldn't, would you? You have the choice. Now, there are always exceptions to the rule. There are always exceptions, but sorry to say, 99% likely, if you're reading this, you're not one of them. Famous people get funded. People who made money for the investors before get funded. Why? They made their investors cash before and they want to make it rain again. With your investor hat on, all right, put it back on. If you invested in a founder that paid for your new boat, would you be more or less likely to give that founder cash again? I think the answer is pretty obvious, right? So if you're wondering if you're the exception, I simply ask, how much money have you made for investors before? So there you go. You either are or not the exception, regardless of how amazing your idea is. Ideas just aren't worth very much. And look, it's really hard to come up with a really solid idea with a compelling business model and market size that you're well positioned to execute on, which is sort of founder market fit. It is, I guess, easier to come up with an idea, but maybe you don't know the difference yet. Now look, let me tell you, great ideas are hard to come by. I know, I worked with some founders for like a year to review the next harebrained scheme that they then came up with. But with the millions of founders globally in aggregate, there are a lot of good ideas around. And frankly, you may be feeling smug with yourself with your idea, but it's pretty likely that someone else has had it before and may even be working on it already. And there may also be a company funded with $40 million that you haven't heard of because you didn't really do the research, did you, properly? Now, ideas, they're just not that valuable. Well, frankly, if you disagree with me, I don't really care, but go try selling your idea. See how much money you get for it. So unfortunately, ideas are fundamentally just worthless. They're worthless because whatever circumstances existed for you to have your idea in a pool of 7 billion people also exists for someone else. which means that ideas aren't unique. Now, on top of which, the general idea has to go through a gestation period to truly thread the needle with the customer. Here's a quote now. Take a look at DigitalOcean. We built a successful company with the idea of building a cloud provider. Is this a new idea? No. Was the competition? Yes. So what was the idea worth? Nothing, because it had been done before. But we found a specific opportunity in a market segment that we felt was underserved and delivered a product that resonated with those customers. That's by Moisey Uretsky, who's the co-founder of DigitalOcean. Ideas aren't enough to get funded, okay? The whole point of this is getting funded with an idea. So yes, your idea has value, but that doesn't make your company fundable, okay? Investors are not investing in an idea. They're investing in a combination of things which together create an investment opportunity. Now, most investors will agree that about 70% of the investment decision is the team. They'll never say 70% of my investment decision is the team though. In fact, investors mainly pass on the team. They just don't tell you that, okay? Furthermore, investors will never invest if your market size is not large enough. If you can't address the market size in question by the second meeting, you're getting a pass too. You can read more about this in a link that I'll put below about how to understand market sizing. Now, there are so many crazy ideas out there, which are also a prerequisite for getting the 100x outcome, that if an idea is bonkers, but the team are awesome, and you have some traction to show the idea actually works, they will invest. Examples, Snapchat, Twitter, for example, right? David Rose sums this up pretty well. Having value and being fundable are two completely different things. While a good idea is usually a necessary ingredient for the formation of a good company, it is not sufficient by itself for any serious investors to fund. Why? Because there are also good ideas out there, some of which have already been developed, tested, and put into practice, thus decreasing the amount of risk an investor will be taking. The bottom line is that investors by themselves are simply not fundable by professional investors. That's by David Rose, who's the CEO of Gust. I just don't trust you. Who are you? Like most founders, you are a nobody. For now though, right? You haven't earned your place in the Founder Hall of Fame. So, who the hell are you and why should I trust you? I can't really judge people from paper, right? Getting good grades, computer science degree from Stanford or an IIT are not predicators of founder success, just your ability to perform in an academic institution. You rolling up your sleeves and showing you kick ass is the best way to separate yourself from the crowd. Traction is the great divider. No matter where you came from, people will think you're going places with great traction. Ideas are easy, and investors know that. You need to prove you can build the product by, well, building the product. Bootstrap something together first, and then you'll have something to present. Execution, that matters. Edison's ratio is true with startup. It's 1% inspiration and 99% perspiration. Look at Ring. I have so many investor friends that can't get their head around the acquisition by Amazon. I did some digging, and honestly, I think it comes down to their execution. The product isn't that good, but how these guys executed is 110%. They just did more than others wouldn't even attempt. And that's pretty cool to me. Execution is the core skill of a founder, not the inspiration of ideas. Derek Silvers wrote this, while it's relative oversimplification, like really interesting little picture, which really drives the point home. And that's ideas are worth nothing unless executed. They're just a multiplier. Execution, though, is worth millions. He maps out a graph of the values for ideas and execution. And then to make a business, you need to multiply the two of those together, okay? The most brilliant idea with no execution is worth 20 bucks. The most brilliant idea that takes great execution is going to be worth 20 million. That's why I don't want to hear people's ideas. I'm not interested until I see their execution. Now, to conclude, I'm not going to keep on laboring the point here, guys. Investors don't fund ideas unless you're famous. There are too many other opportunities. And all that idea shows is that you can see opportunities. It doesn't show that you actually execute on them. So go execute, get traction, and try to get investors to knock on your door and throw cash at you, right? Now, I hope this was useful to help you start thinking about how to start your company, right? And actually start. If you need some help figuring out your business model and whether or not it makes sense, or even if you should be doing a startup, you can book a one-on-one call with me and I can help you, with all that thinking stuff. Cool. All right, guys, like, subscribe, share, it means a lot to me. And if you don't, a fairy dies. Sorry, that's the rules. Okay, bye.